Despite mixed economic conditions globally, people apparently remain comfy spending a few bucks on a soda and a bag of chips. At least that was the big takeaway from PepsiCo's sizable earnings beat for the second quarter. Joining me to discuss the results is PepsiCo Vice Chairman CFO Hugh Johnston. Thanks for joining us, Hugh. I appreciate it.
Good morning, Brian. Great to be with you.
You noted on the earnings call that you didn't see any degradation in macroeconomies, and that was a pretty, I think, stark change in tone relative to what we heard from you guys in the first quarter. Could you drill down on what you're seeing in terms of the macroeconomy across the globe?
Yeah, happy to. I think what you're seeing is sort of a consistent, relatively low growth rate around the world. Global GDP is probably 2.5%, maybe 3%, something in that range. As we entered the year, we were concerned that you'd see more of a drop-off, and frankly, we just haven't seen that happen. I think what we see is sort of this slow, steady growth rate around the world. From our perspective, that was an improvement versus our expectations, and partly as a result of that, partly as a result of the great performance that we've had, particularly in North America, we decided to raise guidance for the full year.
And what about Asia in particular, just to follow up on that one?
Yeah, happy to. So obviously China right now continues to chug along at a steady rate. India is doing quite well. I think the economy is booming there. If we look to Australia, obviously a little bit slower in that regard. The Middle East continues to be steady. And then from the perspective of Eastern Europe, frankly, a gradual improvement off of what had obviously been a pretty significant contraction.
Switching gears to the soda business a little bit, since we last talked, you reintroduced the new Diet Pepsi with aspartame. What did the volume for Diet Pepsi look like in the second quarter, and what's your expectations for it as this new product is flowed back into the market towards the second half?
Yeah, the volumes were down on Diet Pepsi as they have been for a number of quarters, and that's true not just of Pepsi but of the category as well. Frankly, what we did was responded to what the consumer said. We had some consumers that said, we don't want aspartame and we prefer Diet Pepsi without aspartame, and we've given them a product. And then we had a lot of loyal Diet Pepsi consumers who were a large population who said, I really like my old Diet Pepsi. I'd like to have that back. As a company that's been always an advocate for consumer choice, we said, fine, we'll give you both. So we're going to bring both back, and we think it'll be a terrific set of products for the business, along with Pepsi Zero Sugar. So we think we've got the right diet portfolio going forward.
Is it far-fetched to see positive volumes in Diet Pepsi towards the fourth quarter as this new product is coming in?
I think the volumes will improve. As to whether they'll be positive or not remains to be seen.
Fair enough.
So I think the more important thing here, Brian, is the overall LRB category, I think, is continuing to steadily do well. And as consumers shift more and more of their consumption from carbonated soft drinks over to the non-carbonated beverages, most of those categories we have a leadership position in, so it tends to benefit us as they move into non-carbs.
Fair enough, fair enough. On the acquisition front, today we had some big news, Danone making a play for WhiteWave. Two-part question, was PepsiCo involved in that? Did they have any interest in WhiteWave? And secondarily, you guys have had a history of making transformative acquisitions. Is there any interest in doing something now? We've also had Hershey make a play for Mondelez. It seems like the whole packaged food space is in a move to consolidate.
Sure. Let me dial it back even a little bit further, because you're right. We've never been afraid to shape our portfolio in a way that we thought the consumer wanted us to be in order to continue to get growth. And if you look at our history, whether it was Quaker or Tropicana or Izzy or Naked or doing a JV with Sabra, all of those things were about shaping the portfolio. We feel like now we're operating from a position of strength. We've got a portfolio that's shaped consistently with the expectations that we've set for investors, and those expectations, I think, are pretty good relative to what most other companies are doing right now. So the answer to your question is, we'll look at everything, and we absolutely do look at everything, but we're very strict on capital allocation, both from a strategic perspective and from a financial perspective. And the guidance we've given as a result of that is we expect to do small tuck-in acquisitions. No change in that. In terms of some of these bigger deals that have been announced out there, as I mentioned, we do look at everything against those criteria. So if we haven't done a deal, I think you can assume that's because we don't think it's in our shareholders' interests.
Gotcha. And just two more. Since we also last talked, I believe in mid-April, the soda tax passed in Philadelphia. And it's also popping up in other places too. I believe it's live in San Francisco and a couple other cities. Do you feel as though that will impact consumption? What's your outlook as these things keep popping up?
Yeah, I mean, the taxes that we've seen tend to have a one-year impact, and then the categories go back to whatever their trajectory was before that. Obviously, from a company perspective, we're not in favor of taxes that target individual products, and particularly if there are products, we're not in favor of that. So we understand that there is some political will to do this at this point. It's not something we're advocating, but it is something we have experience in managing, and I think we'll manage it very successfully.
And lastly, a fun one. Have you tried the new mac and Cheetos that you guys came up with Burger King?
Yes, I have, and I think it's a terrific product.
I'm with you. What a weird product, but definitely good. Good luck this quarter. I'll talk to you guys soon.
Thanks. I appreciate it, Brian.
Take care.